Good afternoon, guys, and welcome to the weekly market analysis brought to you by Oxshare. This is June Jabour, Senior Technical Analyst at Oxshare. Uh, Welcome, guys, to the stream. First, we're gonna scan the economic calendar to see what news we have. This is the economic calendar we have. This is on our website, as you can see here at Oxshare, and we're gonna scan the economic calendar. Uh, Today is a slow day due to market being closed in Canada and USA. Um, we have big news coming up this week. We have the leading index tomorrow. Then on Friday, we got FOMC members speaking, like Bostic speaking and Bowman speaking. Then we have the at 9 o'clock Beirut time. We have the FOMC minutes, meeting minutes. We can see some volatility in these areas. Plus on Thursday, I think yes, on Thursday we have the CPI for the eurozone and jobless claims for the US, plus the S&P Global US Manufacturing PMI, Services PMI, and then we have existing home sales and crude oil inventories on Thursday. So big day Thursday for traders. Of course, we're gonna see some big volatility in the market, and volatility is our friend, so we welcome it. We need volatility to see some price action and some price movement. Uh, we jump uh, we jump to Friday. uh, we have we don't have so much news on Friday. Uh, let's get started. We're jumping off to the charts. As you can see here, we start off with the DXY uh, on the daily time frame. We can see a market structure shift here. This high has been taken out, as we can see right here. So we are creating higher highs on the DXY on the dollar index. Plus we have this this volume imbalance, as we can see here. Some analysts call it gap. I prefer to call it a volume imbalance. As you can see, we respected this candle over here, respected this volume imbalance, and then we pushed to the upside. Of course, after breaking this high over here, creating a lower high, we retested this volume imbalance, and then we pushed to the upside. We can see as well another volume imbalance over here. So we respected this volume imbalance. We can see these candles try to break down, and then we push to the upside. Of course, big economic data coming up this week can affect the DXY, so we need to practice some caution. Of course, we have some levels for the DXY to reach. First of all, we are currently sitting in this fair value gap over here, and this gap, the midpoint of this gap is around um, around this point over here. We tried to tap in and we didn't reach it. Of course, any price action breaking above this gap and retesting this point will lead us to the highs that the XY has made over here. Okay, so we need to wait and see. If you want, we can go a little deeper. uh, Check out the lower time frames. We'll go to the 1 hour and then go back another time to the 1 hour to lower time frames. So as we can see over here, this is this zone over here. These two lines are the volume imbalance that were created on the daily time frame. We can see they were respected. Plus, we have on the 1 hour this break of structure, and this order block over here is being respected. So these 3 down candles before the big push up breaking structure, these are supply zones, a very strong supply zone. We can see the price pushed to the upside. So yes, until now this order block or this supply zone is being respected. Uh, if we manage to close above it, the next target will be at this point over here. So something like this. So we retested, and then we retested here, and then we push to the upside before maybe breaking down with the economic news. If the economic news is bad for the DXY, it came out negative for the DXY. So as you can see, we are totally respecting this order block, this supply zone over here. You can see maybe a push to the upside, and then maybe a push to the downside, targeting these areas of supply. So it's very important over here uh, to see what the price action is and trade off of it. So respecting this area will give us a push to the upside, and these rejection areas could lead us back to the downside, targeting these supply zones that are at the 102.6 levels. So we go to the Euro USD. So this is the daily. As you can see, we have been in a downtrend for some time. Okay, and then we got this huge candle, green candle over here, leaving a very well defined order block, a very well defined supply zone. As we can see, we took time. We tried, people who tried to long Euro USD at these levels got stopped out, and that is because these are liquidity levels that exist. So these areas over here, these equally relative equal lows, are liquidity levels. So retail traders who long at these places got stopped out, as you can see over here. We took this liquidity, tapped into this order block, and then we're pushing to the upside. Of course, we have minor structure shifts, market structure shift over here, declaring a short-term downtrend, and this is the supply zone that was formed, the demand zone that was formed, the supply zone that was formed, excuse me. So this is the demand zone. We tapped in this demand zone, and then we are pushing now to the upside. Closest target is going to be around these points, 109.3, if the uptrend continues, and if the economic data comes in positive for the negative for the DXY. So it's very important to recognize these levels. As you can see over here, these, I'll put a dollar sign so you can see it. So these relative equal lows, as you can see over here, are uh, liquidity levels. We took them out, tapped into this supply zone, and then we are pushing now to the upside. This is on the daily level. So if you want to go a bit lower in the time frame, check the 1 hour. So this move over here that happened, this downtrend move, okay, started right about here. This last upward candle, a market structure shift happened. It's a break of structure. We continued down to the downside, and now we have these levels. These levels over here, same concept. So we've got these levels over here as relative equal highs, double top. So some liquidity, some retail traders shorting these markets at these points are creating the liquidity in the market. So we can expect a move like this, liquidating these traders and then pushing back to the downside. First target's gonna be around this low, the low hanging fruit we call it. So the immediate low, the immediate significant low, and this candle is the uh, PPI candle. So after we push to the upside, we can maybe target these lows over here. Of course, on the lower time frames. So if you want to go back for scalping, let's say, okay, we can see the markets is changing characters over here. So this low has been broken, and now we are pushing to the downside. We've got this gap over here. After we pushed to the upside, we retested it, and then we pushed again. We formed a triple top pattern over here, and now we are pushing to the downside. So it all depends on the economic data coming out this week. If the data uh, is perceived as positive for the traders and investors for the DXY, we can see gold plummeting back to these levels down here. We'll go to the gold now. Check the gold. Okay, so we are at this point, same concept that we've talked about. This is the 4 hour. So we broke this low with this candle, retested these supply zone over here, and we got a rejection on the 4 hour. So if you want to set some perspective, so there is some probability that we might see lower levels for the gold, maybe at this level, considering a good buy from here for the bullish for the bullish traders. So we may expect a move to the downside over here and then push back. And I think we're gonna be trapped in this range for a bit of time. Uh, of course, as geopolitical events unravel, and we can see some maybe a peace treaty going on in the war on Gaza. So we may expect a bit of correction, tapping into these levels. Maybe the gold will form relative equal lows at this point, create some liquidity in the market, and then push that downside. So we can see a move like this, enticing traders to buy at these points, targeting these highs, a bit of consolidation, then liquidating these traders, and then we push to the upside to these levels. And I think we're gonna stay in these ranges until a much clearer picture is drawn regarding the geopolitical events that are happening around the world. So this is for the gold. We'll go forward and analyze some indices. Let's start with the ES30. So we have this monster bullish move that started back on October 23, and we just kept going and going. This is partially caused by the high expectations of traders that we are gonna cut rates mid this year, and we'll talk about this in a moment. And plus the good financial reporting that the companies reported during the last quarter of the year, signaling better financial positioning for these markets. So this is some fundamental explaining for this monster move that happened on the US 30. Of course, after big moves, the market needs to breathe. So we're likely gonna see some retracements, uh, some correction waves in these markets. We have these gaps over here that were forming. Uh, As you can see at these points, this gap was tapped and then we pushed to the upside. We can expect a correction wave to these points before continuing our trend. Of course, this all depends as well on the financial vision of the FOMC. So if they see that uh, inflation is stickier than expected, that means inflation isn't going down at the rate that they were expecting. We might see some persistence in the interest rates, and that means we are not going to cut as fast as the traders and investors were hoping for. So we might see a deeper correction wave for these markets before pushing back to the upside. Let's go and see a bit the US 100. So same scenario for the US 100. Of course, the technological sector in the US or in general is much more cyclical, meaning that it is more affected by the financial decision, fiscal and monetary policy that is applied by the central banks, and by this I mean the Fed. So this monstrous wave, we can see this trend line over here forming. It's a steep trend line, a bit more than 45 degrees, but we might see a break over here, maybe targeting these lows over here. So as you can see, we broke structure, break of structure again. This break of structure came from these supply zone, and these supply zone coincide as well with these support resistance level over here. So we can see maybe a push to the downside. Of course, we can take the whole wave as one. So this is not a very appealing range to long for if we want to take the daily level. Of course, we want to search for a discounted price if we want to long the US 100. So we want to find some areas where these ranges are below the zero point 0.5 Fibonacci levels. So we can find this breaker over here, and is to create another low, and we couldn't, so we pushed to the upside. This acts as a support now. As you can see, we pushed to the upside, retested it, and then pushed back again, and it falls below the zero point 0.5 level. So this is a deep correction. We might not see it in a matter of weeks or months, but this is a likely target for swingers or for swing traders who only want to trade the high time frames. So if I want to go deeper now in the time frame and watch what's happening at a lower level, we'll go at the 1 hour. So we had a break over here, as you can see, and this is a break of structure over here. We broke the slow and pushed to the downside. Of course, we retested this gap. As you can see, this gap over here, a good entry would been over here, short over here, stop loss above this point, and then first target would be at this point, third target, and maybe the last target over here. So now we have a bit of consolidation. Of course, we will not see some big movements today due to market close in the US and Canada. So yes, I expect we will see these movements coming this week based on the economic calendar and the big news coming out this week related to the US economy. So this was it for the analysis. Stay tuned, and we will see you next week on Monday to catch up and see what the markets has given us. Okay, trade safe, and thank you.